Welcome back to the Money Pig Podcast, brought to you by Goodwin Investment Advisory, where our mission is to lead people to financial peace, independence, and generosity. And today on the show, we are joined by GIA's newest investment committee member again, and she's the founder of Pantana CPA, Krista Dempsey, to talk about starting a small business on good financial footing. I'm your host, Reed Trigo. Thank you so much for coming back again, Krista.
Thanks, Reed. Happy to be here.
Well, that's great. We're so excited. So the reason we want to talk to you this time is because clients come to us with ideas of maybe buying real estate or investing in a franchise business or buying some other business. And we thought it would be a good idea to talk to you to talk about maybe the top 4 or 5 things that are key for them to get started on the right foot. You know, if you start with a financial mess, you're probably going to end with one.
Absolutely.
Okay. So Garbage in, garbage out, I guess they say. So that's what we're going to do right here. We're going to talk about the top 5 things you need to do to start up clean in business. Okay. So talk us through number 1.
I would say number 1 is probably getting your entity selection set up.
Okay. Entity selection. Yes.
You've got a few options. You can do a sole proprietorship. You can do an LLC. You can do an S Corp. You can even do a C Corp.
Mm-hmm. Mm-hmm. So this question just came to mind because I'm familiar with all these, but in a sole proprietorship, you can run W-2, pay employees with that?
Absolutely.
You can, but probably by that point, you'd want to be an LLC and an S Corp.
Most likely for tax purposes, yes.
Oh, excellent. This is why you talk to an accountant. Accounting, the language of business.
Uh-huh.
Yes, it is. Okay, so you select your entity, you go to the Secretary of State of your state or whatever, and you pay a little filing fee and they set you up.
That is correct. And typically if you've got more than one person involved, or it's a 2-member LLC or 2-member S Corp, you want to drag an attorney into that.
For why?
To cover yourself.
Yeah.
So it's like getting married, and so you need an agreement, like your prenup. And you want to make sure you've got a way out and who's responsible for what. So you've got all those bases covered.
And that's called an operating agreement.
It is.
Yes. Mm-hmm. Okay. It really is. It's reasonable because if one of the partners decides to move to Vegas or wherever and dump everything or wants to sell their share, you've got to have an agreement while you're all friends.
Correct.
How that's going to end up down the road.
Right.
Yep.
Or if they stop working and leave all the work to you.
Oh, what's
going to happen?
That's no good.
Right.
Oh, yeah. So they outline their role in the business. In
correct.
The operating agreement. Amazing. Okay. So that's the way we set up the entity. Second thing we have here is go get a bank account.
Correct.
Okay.
You got a couple steps before you can get that bank account. You need to get your EIN number with the IRS and possibly a county business license.
Okay.
Some of the banks require those now.
Mm-hmm. Mm-hmm. So then you can set up your own bank account for that entity.
Correct.
And it's important to keep all of that entity's money together and all your personal money somewhere else.
Right. You don't want to commingle.
Okay. What's the downside of commingling?
So the downside is if you were to get audited in the business and you've commingled funds, you've now opened your personal account in life to the IRS.
Okay. So you've, what do they call it? You've the corporate veil.
You've pierced the corporate veil. Correct.
Corporate veil. So
yes.
Theoretically, there is a protection there if you haven't commingled your funds. In other words, bought football tickets out of your business account for a non-business expense.
Correct.
Okay. I use that as a very specific example because
people do that all the time, right?
They do.
Uh-huh.
Yeah. Yeah. Okay. But it's pretty funny. I did not. It's not me who did it.
Okay, Reed.
No. It wasn't me. Okay. You just looked at me. Okay. But when you have your own bank account like that, you can you can assess the health of your business a little bit better, right?
Right. It's so much easier to see what happened in the year, to know you've picked everything up. You haven't missed any expenses or any revenue. It's all in one place.
So if a business owner decides, hey, I'm opening up a business, I'm just going to run it all out of my personal checking account, it's just complicated from the start.
It would probably be a disaster.
That's how you start a messy business.
Yes.
It's not how you start a clean business.
Correct.
Okay. We want to talk about how to start a clean business. So
absolutely.
That's right. Okay. Number 3.
Number 3 is probably going to be your software.
Accounting software.
Yes.
Okay.
So you've got some options there. Obviously, QuickBooks Online is the leader of the pack. You've got Xero, FreshBooks are out there as well, and they're close second. No one's going to top the QuickBooks Online, most likely.
Okay. Just super easy to use wherever you are.
It is super easy. You can do it on your phone. You can do it on a tablet. You can do it on your computer. You can have multiple users. It's got it all in there. You can invoice from it.
Wow. Easy.
Integrates with banks.
Yep. It's all too easy. Not too easy. It's good.
Right.
It's something that business owners need things to be easy.
It'll simplify the aspect of getting all that information together.
So when you start up and you say, I start a business and I get QuickBooks Online going, do you recommend that a business owner do their own books for a little while to learn how to do it just so they know the flow of it? Or do you think it's better to have a bookkeeper or an accounting firm like yours to walk alongside them?
It depends.
Yeah. It's a really honest answer because you should say you should hire us.
Right.
But,
no, it depends. Yeah. If you've only got a few transactions, say it's a rental house, for instance, you can probably track what's going on there for a year.
Yeah.
On your own.
Sure.
But obviously, the more transactions, the more activity you have is when you're going to need some help.
That's right. And if things get more complicated, like you buy some heavy equipment, you're not going to do that for a rental house probably, but in a business, heavy equipment that you have to depreciate.
Correct.
You have to go back and throw in general ledger entries in the previous year.
Look at you using general ledger.
Oh, hey, here I am. I am married to a person who does these kinds of things. So, oh yeah, that's so interesting.
Right.
That's when, okay, good. So it's fair to encourage in the beginning, someone with a simple business, learn it yourself. Mm-hmm. As it gets more complicated, that's what we always say. Success breeds complication. Mm-hmm. Yeah, complexities. Mm-hmm. Okay, great. And so in that accounting software, there's a thing called the chart of accounts.
Right.
This is something people don't know about. You know, I want to start a roofing business. What do I know about a chart of accounts? So how do they explain that to them?
The chart of accounts is basically all the different accounts that are going to come into play on your balance sheet and your profit and loss. So it's like my checking account, my savings account, accounts receivable, loan accounts. Those are your balance sheet accounts.
Okay.
And then on the P&L side, you're going to have your sales, your cost of goods sold, and then operating, you're going to have advertising, utilities.
Yeah. Wow, that's funny.
That was good.
Mm-hmm. Oh, yeah.
Yeah. So all of those make up your chart of accounts when you combine every account listing together.
Okay, so every time there's money spent, then that money is allocated or assigned to an account.
That is correct. Yes, and it actually hits, in that case, double entry accounting, right? It's going to hit two accounts. It's going to hit your checking account going out and then hit the expense account.
Bingo.
Right.
I've never heard of that term before. So
you haven't?
No, I didn't know that one. I know general ledger. That was about as far as I go.
I'll have to get on Christy for that.
I understand the concept. I didn't know.
I know
double
you do.
Entry. Okay, that's awesome. Okay, and so also the accounting software allows you easy access to profit and loss statements and balance sheets.
Correct. So if you're putting good information in, you should get some good information out and get a profit and loss statement, a balance sheet, and kind of see where you're at for the year.
Great. And I think that most people can intuitively, very simply understand what a P&L or profit and loss is, right?
Correct.
You see revenue came in, expenses went out, and there's a bottom line. It's either a regular number or it has parentheses around it.
Correct.
And you want it to be a regular looking number.
Correct. You do not want it to be negative or red.
Red, right.
Yes.
Exactly. So, but the one financial statement people don't really understand as well is the balance sheet. So how do you explain what that is to somebody who doesn't really know this stuff?
Sure. So a balance sheet is kind of like a summary of what you own and what you owe. So on the top of the balance sheet, you're going to have like your assets, the cash accounts, your accounts receivable, your assets, your fixed assets will be listed there.
Equipment and stuff like
Correct. that. Mm-hmm. And then on the bottom half of a balance sheet are your liabilities, which is your accounts payable. If you have loans, those loan balances will be down there. And then you have equity below your liabilities.
So it's assets minus liabilities gives you equity.
Correct.
Okay.
And the equity is kind of what you've left in the business or what you've contributed to it. So it's where your profit comes into play, if there is a profit.
Okay.
But yeah, so it's like your net worth.
Yeah, it's like a net worth statement. Okay, so a balance sheet, like a net worth statement, is kind of just more of a snapshot in time.
Correct.
It's not a period of time. It's like, hey, here's where you stand right now.
That is correct.
Okay, great. That's good. It took me a long time to understand that. Like not just now talking to you, but
right in life.
Yeah, I just want to know how you explain it because nobody explained it like that to me. Well, maybe they did, and I'm just not registering, but that's okay. All right. So then, what's our next step? We've got our accounting software. It's set up, chart of accounts. We're spending money. We're bringing in money. Now, what do we have to do?
We want to make sure we're reconciling. So that includes checking accounts, credit card accounts. You want to make sure you've picked up everything that's hit those accounts. So whether it's an expense or income, you don't want to miss anything. And that's going to give you accurate financial statements.
And to reconcile is to bring into balance.
Excellent. Yes, it is. And QuickBooks makes it so easy.
Yeah. Does it?
Super easy.
Okay.
So you'll need your bank statement from the bank, and then you're just going to mark off what's cleared the bank. And ideally, your difference would be 0. And if it's not 0, you have an issue.
Because something wasn't entered or accounted for.
Correct.
Accounted for. An accountant. Okay, good. So this is where you'd want to have maybe the help of a bookkeeper or a CPA, right?
To make sure it's done properly, yes.
Okay. Mm-hmm. And so then let's say for your clients, I'm starting a business and I come to you and I'm like, hey, I don't know anything about this. It's going to be a little bit complex. Can you help us? What do you do? Like, is it a monthly?
We do. We offer a package to our clients.
Okay.
It includes a variety of things. So it's going to include the accounting software if you don't already have something. And then it's going to have either the bank reconciliations and the credit card reconciliations. Some clients like us to actually do the data entry as well. And we can work that into a package. So it depends on how comfortable the client is in their day-to-day operations. So
yeah, and how much time they have too.
Correct, because they might be too busy selling, and that's great. That's what they need to do because that's what they're great at.
Yeah, I think about new businesses, and I'm like, okay, there's a very fine line of people in new businesses who should probably actually do their own books. This is my personal opinion, right? Because if it was me, I would procrastinate forever. I would never get to doing the books because I don't really want to open QuickBooks. And
you are not alone.
I'm not a rows and columns person. Okay. But if it were perhaps someone who loves bookkeeping, they could take probably 3 hours to do 15 minutes worth of work because they just love rows and columns.
Correct.
And data entry and stuff. So there's this fine balance of person who could actually do their own books and not procrastinate or take way too long.
Correct. So many people procrastinate.
Is that right?
Yeah. And the longer you go, the messier it's going to be because you've got so much stuff to go back and find and account for.
Yeah, that's amazing. Okay. All right, good.
But if we're reconciled, if everything's in place, you should be able to get some good financial statements at that point. But if it's a mess, your financial statements are not going to be reliable.
Right, which is step 5.
Correct.
Right? It's review and understand your reports.
Correct.
So what do? You issue a balance statement every X amount, P&Ls, X often?
We do. We issue those monthly, and then our account manager will normally talk with the client about those and kind of go over and see if everything is on track. We also do tax projections at least annually, but possibly more often if needed. And then our package also includes tax return.
Oh, great.
For that entity.
Okay.
Correct.
Okay. And really, how often does a business? The answer is going to be it depends on this, but typical small business, few employees, a little LLC. How often do they really need to look at a balance sheet? It depends.
It does depend. It depends. Well, it depends on if you've got accounts receivable. I'd look at it pretty frequently because you want to make sure that balance is accurate.
What people owe you.
Correct. You don't want that to get away from you.
Wow, no kidding. Okay.
So
I see.
So it does depend, Reed.
Of course, it depends. My favorite answer. Okay, awesome. Those are the top 5 things we need to do to start up a business cleanly, right?
Correct.
You've run a business for a long time now.
Yes.
Okay, and so I always think like the 3 things in business that are kind of the art of business, the things that people do seminars about and write books about and do TED Talks about and have for decades are money, the finances.
Right.
The people, right?
Yes.
The people, which we love, and marketing.
Right.
Okay. So we talked about money, but I want kind of your hot takes here on what's like a lesson you learned about hiring or about personnel in your business ownership.
It was a hard lesson.
Uh-oh.
So I learned that possibly I was the problem in hiring.
Oh, so you fired yourself from hiring?
I demoted myself from hiring.
Really?
And I brought in some help. So after a few bad hires years and years ago, I decided that the key denominator was me. And so I brought in some help to interview as well. I brought my husband in and said, you know me, you know what I can work with. You do the second interview. So he did that, and we hired some great people that have been with us for over a decade.
Oh man, amazing. That's good hiring
right
there.
So now when we interview, it's more than just me. There's a few interviews involved.
Yeah, that's amazing because it is hard to interview people, especially in a small business.
Right.
Where you have how many employees?
10 to 12.
10 to 12, yeah. Mm-hmm. And in a small business, because somebody comes in, you're going to interview them yourself. They tell you about themselves. If we're personable at all, we find some common ground. We realize, I really like this person. And I love them, yes. Yeah, big heart. I could hire you.
Absolutely.
I want you to win. And I don't know what your skills are, but I want you to win. This is how it happens.
Yes, it is.
We're not. So I always knew this, and now it's just so validating to hear a very successful professional like yourself validate that for me. Well,
yeah, it was a hard lesson, but we got it down now.
Oh, that's good. Okay. All right. Krista's hot take on a good lesson you learned about marketing. This is the other art of business.
See, you picked all the ones that I'm bad at.
Oh, geez.
So marketing, I like to experiment, I suppose, with marketing. Mm-hmm. It's not my forte, obviously, but it's fun. But I think I need a professional.
Is that right?
I do.
Yeah.
So I think we've reached that point where, because times have changed so much. And all the social media, sometimes I feel like I need a person just to do the marketing.
Isn't it amazing? Mm-hmm. Yeah, that can keep you really, really busy. And figuring out where these clients come from. And am I attracting the right kind of client for my business? It's just so difficult. So marketing is definitely an inexact science. Geez, you aren't kidding. There's so many firms and seminars. Everybody has a seminar.
They do teach a lot on marketing. That is for sure.
Yeah, awesome. Well, great. Krista, thanks so much. It's great to have your input on kind of how to start a business cleanly. People ask us that a lot. Mm-hmm. And whether it's, again, a real estate investment, it's not all that different than buying a franchise or running your own business.
Correct.
So it's really, really great to have your input on that. Thanks for being here.
Absolutely. Awesome. Pleasure. Thanks, Reed.
Uh-huh. And as financial advisors, we manage and rebalance portfolios. But the unique value is that we work to understand our clients' individual goals so we can have these types of planning conversations that are so personal and unique to each individual, because then we can refer trusted partners like Krista Dempsey from Pantana CPA. So again, thanks for being here. And thank you for listening. We will catch you next time.
The Money Pick podcast is hosted by Reed Trigo, a financial advisor at Goodwin Investment Advisory. This podcast is intended to share information and perspectives, but should not be interpreted as legal, financial, or tax advice. The opinions shared by participants are not necessarily endorsed by the company. Goodwin Investment Advisory is regulated by the SEC, and the company operates in compliance with applicable securities laws and regulations.